Good afternoon, everyone. This is Christian with PerfectStockAlert.com, a 100% free service for smart investors and traders. All we ask in return, please refer a friend. Today is Monday, April the 22nd, 2013. We'll be looking at a few different charts today and then ultimately analyzing gold. Starting off looking at the FTSE, the London Financial Times Index. The main thing I want to bring to your attention here is this right here. This is not strength, and this early in an overall bounce here that we talked about over the weekend, we told you that we expected this to just be a bounce and be looking for this bounce and find some time entry opportunity signal that would tell you to get short at that point again. And we're looking for something like a shooting star or something like that. Whenever you get a bounce, you want to look for something like this, little shooting star kind of thing. You can also see them here at the bottom, but typically you need to rise up off of the low before you form them to make a better signal. Typically you'll get several days to the upside, 1, 2, 3, 4, and then you have to roll over, and you'd like to see a top up here somewhere that you could use. Keep it in mind that you typically find your resistance points at the 50-period moving average. So with that in mind, a bounce, we don't expect to have a great deal of momentum to the upside here before we hit that resistance. I don't know, you can see as of today's activity on the FTSE, we're already forming this little shooting star signal here, only 2 days up off the low. So it's just really not a big move here. We could still see another day to the upside and kind of extend this day, test again up here, this 50-period moving average. But I believe that that's about it. You may have one a day that happens a higher high intraday tomorrow, and then you see the peak that way. So there's different ways it could play out, but I again don't see this thing lasting very much longer. Looking now at the Russell 2000 Small Cap Index, another chart that's indicating a great deal of weakness to me. I want to kind of point this out to you. You can see this hammer candlestick formation, or at least it looks like one. That's not really a hammer. A hammer happens when you have a pullback here, and then off of the low you get a hammer candlestick formation. It looks much better. It's showing they actually sold off, and then buyers came in and demanded that they higher close here off of the low. That makes a lot of sense. In this case here, you sold off, bounced already, and then you sold off intraday, and then came back up and closed basically flat, a little bit higher, but basically all you're seeing here is more of a doji, a long leg doji scenario where you're looking at indecision by traders, not actual buy string coming in. So when we look at that, we say, okay, then let's consider this a different way. Let's say that this has actually made half of its moves to the upside. They're indecisive here. You could roll over here, but you could also get a little bit higher. And whenever you measure a move, you're basically saying that this is the middle point. So this previous low to this point here, added that to this current point, give us about here this 50-period moving average, this middle Bollinger Band line, all of that in line with what we expect to find a top at. And then at the same time, you'd be looking at this overall pattern and say, okay, well, the overall pattern looks like the first shoulder formation, the head formation, the second shoulder formation would be forming there, something like that. So again, this is just another sign that I don't see us having a great deal of more room to the upside here on the long side. What may be the clearest indication of the short-lived bounce that we're talking about here would be gold. Gold has actually been tracking this sell-off very well. You know, it's been in the news a lot, which has been selling off for a while here, but very bearish chart, overall bearish chart formations here. We talked about it when they were breaking down. Also, the massive move here and here, largest one-day drop in 30 years, they say. Pretty big move here, and then the main overall pattern here is that this is the first leg here to the downside, and this is just a little flag pattern, if you will, in the overall downward move, and then this is also the measured move. So basically you'd measure this distance out and say, okay, well this, and then once you close below this point again, you will take that distance and subtract from the breakout point. Tells you how much lower you can go before you found another bounce point. So that is a very bearish reading on this chart. Obviously nothing here that would be bullish in any way, shape, or form. And I'm anticipating that the markets have already shown that as gold was breaking down, then stocks started falling as well. So the idea that, oh, this is going to fall on gold and we're just going to see the markets rally, probably not likely there. So keep in mind when this thing breaks down, it'll be important to you. Now, regarding timing, I would look at the chart and say, okay, you have had 5 consecutive days, 1, 2, 3, 4, 5 consecutive days to the upside in a row. And no market moves straight up or straight down. Typically, 3 to 5 days is what we call normal. Here you can see you had 4, 1, 2, 3, 4. Downside 1, 2, 3, 4. Then you get 2, 2, 2, 1. See, 4 to the upside. That's all normal activity. When you start to get beyond that, it's like a rubber band stretching, and eventually you let go of it and it snaps back. So after 5 consecutive days to the upside, I don't expect much more to the upside here, and I start looking for this to roll over. Also take into account of this one and this one, both sell signals here with a wick protruding to the top. Very bearish sign here. So all this would tell me look for this to start breaking down here, and again, that's going to be bearish for overall markets. So that's my take on the markets for today. Not a lot you can read in today's markets, but there are some signs of weakness that I just thought I'd bring to your attention. Okay. For those of you who might be wondering where you can look at my charts that I annotate every single night, you can go here to the market section on perfectstockalert.com website. It's a free site, and you simply go here, click on the market charts, and you can actually view my personal charts, both short-term and long-term, with my stop-loss limits, entry points, and so forth and so on. You'll notice that on today's gold chart, I did have a black arrow on it. It was indicating that if we got confirmation the following day, I'd start selling right then. Okay. If you've not been to the free website at perfectstockalert.com, it's right there. It's 100% free, and all we ask in return, please refer a friend. God bless. Take care. See you in the next one. Please take a moment to review our disclaimer. The information provided herein is our opinion only. Under no circumstances do any statements here represent a recommendation to buy or sell securities or make any kind of an investment. You are responsible for your own due diligence. To summarize, we do not provide investment advice, nor do we make any claims or promises that any information here will lead to a profit, loss, or any other result. These videos are for educational purposes only.